Has been buzzing. It did in the past. Of course, we saw a bit of a lull during the pandemic as expected, but now there is an uptick, like Mansi is telling us. Let's understand the situation a little bit better. Joining us from the consultancy firm Knight Frank is Gulam Zia. Gulam, great to have you with us this evening, and pretty good news for the real estate sector. That report that you've put out, I was looking at it in particular for a city like Mumbai, where property registrations have been rising 78% year on year. In May, this is the kind of uptick that we are seeing, and registrations also. We are seeing there was a 54% in that price band of 1 crore and over. And in terms of apartment sizes, the houses are between 500 and 1,000 square feet. So that's the larger kind of outlook on what we're seeing on the ground. But my question to you is this kind of spike for real? According to you, what you're observing on the ground, is there a sink over there? And very importantly, is this going to be sustainable?
Yes, actually, the point you're trying to make, whether it's a spike or really on ground we're feeling it, let me confirm that last year or so, we've seen the kind of traction that's happening in real estate market all over, and especially in Mumbai, which is unforeseeable. At least in my career of 30 years, the kind of growth that I have seen in last 1 year is fabulous. And this is, well, various reasons, but one or two of them was perhaps the lowest interest rate, year and a half. Of course, last month or so, the cycle has slightly turned, and the interest rates have slightly started going up. But on the other side, the best values, the lowest ever rates, etc., all those were causing a huge reason for home seekers to buy rather than rent. And that has been on-ground reality, and of course, going all the way up to all your data that you've been tracking of the registered real estate developers, also showing it very clearly. So yes, the traction is for real. The question is whether it will sustain. And honestly, I don't see a reason why it should not. Because if I have to look at the numbers during the COVID period, the dip was huge. And prior to that, at least half a decade, the real estate industry was in a bad shape. In fact, residential real estate was worse performing prior to COVID. And about 7-8 years of that period, during which all your economic indicators were booming. You had a great GDP, you had huge number of job creations, no dearth of jobs, etc. And during all that, home consumption was actually declining. And that was something which was puzzling all of us. And there had to be one reason which perhaps COVID brought to these people, that they have to buy the apartments instead of waiting for the prices to correct, or just about considering leasing it instead of buying it. Those mindset shifts have happened during the COVID period. And those 7-8 years of booming economy and no real estate residential sales happening is giving me enough reason that the demand which has existed all through now is turning into sales. And this will not stop so soon. At least next couple of years, we shall see this going on. And that will definitely confirm that this, I don't want to call it boom, but then resurgence of residential real estate is here to stay for quite some time.
Well, that kind of goes against the grain a little bit, and I'll tell you why. Because only yesterday we were talking about how investments in equity have seen an uptick. Surely these asset classes, as far as real estate is concerned, has always been an illiquid asset class compared to what one puts in equity, and the kind of growth that one expects over there has been consistently growing. So for a younger demographic, they're looking at more returns, better returns on investment when you put in money in equity rather than real estate. Over there, rentals do come into play. Long leases do come into play, because that's the kind of lifestyle that many of the younger demographic seem to be attuned with. Are you telling me that that is changing and that is going to change some more going ahead?
Well, the only point I tried to make, which is in contrast to what you just said, was that the pandemic induced that requirement of owning a house, because that's what we all have seen in last year and a half of pandemic duration, where the landlords were not very, very kind to the tenants, and the requirement of a house which needed working from home, study from home, and so on and so forth. That was something which was very, very different, which never existed in earlier periods. Now comes the point of preference of the Gen Zs and millennials to focus more on equity and less on real estate. That is debatable. However, last couple of months of performance of stock exchanges perhaps is giving comfort to these youngsters to focus on real estate as well, because that is one sector which is obviously not doing too well. And that is something which I would want to believe, that this entire mix of it, lowest interest rate regime with the lowest housing prices, has actually created huge demand. As I said, the pent-up demand has always been there. Now that pent-up demand, how much of that is the Gen Zs and millennials, is of course the data is not available. But whatever said and done, here is a very realistic situation where for at least about 7-8 years, the home sales were dwarfed. But now coming back, so I would say at least 3-4 years it will take to satiate, to complete that demand which was existing for almost about a decade in past.
About pricing, how has that changed in the recent past? And we are a price-sensitive market on almost every count, and of course, real estate being no exception. How has that aspect moved? Because when you look at it from developers' standpoint, they're not willing to concede ground on margins. Has that really changed? Now that you're seeing this interest rate cycle change, while you're kind of seeing that uptick happen, prices will need to kind of be at a level where many of the new buyers would want to come in and want to invest in real estate.
Well, the prices have been falling for almost about a decade. It's only last, I would say, a couple of quarters, I think not more than 2 quarters, the prices slightly inching up is something which is becoming a reality. And that also because of a few very, very evident reasons, whether it is the Russian war or a lot of other reasons due to which the construction cost has been shooting up, the energy costs have been going up. So there is a definite cost pressure on the supply side, and that they're trying to pass on to the buyers. And that is something which has started happening at least in a few prominent in-demand locations. And that's also, obviously, it's only from the reputed developers where buyers are willing to pay a slight premium. And that is where we have started observing about 5 to 7% of price rise in a very select few markets on a very select few projects. And that is something which is at least telling the home buyer that the lowest price regimes are behind. Interest rates have also started inching up. But in spite of that, the number that you started with, if Mumbai is still watching about 9,500 apartment sales in the month of May, which, as you know, it is the decadal best, all those numbers are yet confirming that the buyers are willing to take a slight increase in price as well. In times to come, that's exactly what happens. Whenever the price rise cycle begins, a few of these real estate developers are trying to push it harder, trying their luck harder, trying to take the price rise in a different direction altogether. And once again, affordability becomes a question and the sales start suffering. In the interim, at least, when the price rise is negligible or about a couple of percentage points, in that period, the sales at least are not going to go down. Beyond that, assuming a 10-15% price rise has to kick in, that is when we have to perhaps regather and look at what's happening out in the market. But in the interim, as long as the price rise is minimal or next to zero, I don't think there is much of a problem of buyer sentiment.
I'm saying that raw material costs are going up. Now you're looking at cities like Delhi also increasing the stamp duty. That was an incentive for many to finish doing it while they had this lower stamp duty regime. It happened in other parts of the country too. I want to also understand how things stack up between commercial and residential, because by way of investments, how are these verticals looking and in which geographical pockets? Is there a similarity that you see in certain metros? Are things different in different parts of the country? Are there new markets emerging as well? When you talk about commercial and residential, how people are parking their money, how they are investing in real estate?
Look, as far as commercial real estate concerned, the organized real estate play has very little for individual buyers, individuals like you and I to park money, because the ticket sizes are so huge that you have no other option but to either piggyback the REITs or something like that, or else only go for small shops in residential towers when you have the mixed use, etc. But the organized commercial sector have very little play for individuals like you and I. And that remains. However, the sentiments part, if you're talking about what's happening on ground over there, well, first of all, during pandemic, the worst hit industries or versus real estate sectors were commercial and retail. Commercial has started getting better. In terms of absorptions from 60 million pre-pandemic square feet absorption pre-pandemic, in the year it has last year it was about 37, 38. Once again we're looking at about 39 odd million. So gradually it is inching up. And on the other side, even the lease rentals are showing positive signs, about 4-5% increase in key sectors and key markets. And that is what is evident, and that's reflecting, of course, in the performance of a few of those listed REITs as well.
Right.
So some positive signs emerging for commercial real estate as well, but retail perhaps will take a bit longer.
Right.
But commercial, positive signs.
Gulam, yeah, always a pleasure talking to you. Thanks very much for joining us with that perspective on the Knight Frank report that has been put out about the uptick that we're seeing in the real estate sector.